But if I go to you to fucking put cement in my ass.
I think I appreciate everybody tapping in tonight. Let me find our man, the man of the hour, JP. Let me see here what we got here.
Yes. Can you hear me?
Loud and clear, my man. Loud and clear. Hey, everybody, man. Welcome to the Wealth Squad's training tonight, man. We're making history tonight. This is the first time the Wealth Squad has come in contact with the Money Flow in a Wealth Squad training, man. And I'm just I appreciate everybody tapping in tonight to this training. The man needs no introduction at all. But to the people who don't know Gerald, Chris is pretty much Gerald's protege in the investing world and the money flow and following the blueprint. And so I really wanted to teach the money flow because it's what I also use, but I don't want to teach it because why teach it when I could just get the man himself to come on board and drop the gems and really run you guys through his strategy. And then, look, just to team up with Gerald. Gerald's become a really good friend of mine. We talk all the time. And I'm really, really happy to have him on board tonight. So we'll go through the money flow, his system of how he uses it, how I use it, and tag team this together. And then obviously if you guys have questions, put them in the chat. I'll kind of be facilitating that with Gerald, and then raise your hand and we'll leave some time for questions that you guys can do things. So without further ado, Gerald, man, I turn the time over to you, and you should, everybody should be able to see Gerald's screen, and he can run through things, man.
I just did something. Okay, you can see my screen now? Yeah,
we're good. We're good.
Right, so I want to apologize to everyone up front. I do not use Zoom very much. So it's I clicked a button, it disappeared, and now it shows. You can see what I see, right?
Yep.
Let's see. You can still see me though, right?
Yeah, we can see you just fine.
Oh man, what did I do? Because I took away the screen where I can't see me. So it's weird. Man, I appreciate you having me on here. There's a lot of people on here, man. I'm always excited to share the money flow. It's what I like to do. And like you said in the beginning, me and Chris, I don't know, we met, I want to say it's been like 3 years now. One day he DM'd me, and he was one of the first people to buy my book and put it to use, and like started hitting me with feedback and, hey, I'm doing this, I'm doing that. And was a big encouragement to me because I actually wrote the book like 5, 6, 7 years ago, man. It's been a minute. And I'd been putting it together, and I don't know how much we want to get into all that if people care. Let me mess with this screen. So you can see the S&P here, huh? Okay, it just take me a second. I'm glad we can see it because I can't. Okay, I guess when I hit stop sharing, it'll go back to where it was. All right, now I'm cooking. So what the money flow was is like a lot of people, man, when you come to the stock market, man, it's chaos. There's so much stuff and so much information, and there's so many ways to do everything. And there's so many styles and strategies. And like a lot of people, I floated around trying different things. And I've been studying and I, Elliott wave and Fibonacci ratios and moving average systems and day trading strategies, all these different things, man, but none of them clicked with me. Like it, how like when you just have that moment or you click or you get some clarity. I didn't have that. I felt confused a lot, chaotic a lot. And as we're looking here, we're looking at the S&P, and, now it seems obvious to me, but when I was looking at it, trying different things on different time frames, I wasn't seeing what I see now. And I'd been reading at the time when I was really laying down the money flow, the common thought, and none of this is proprietary, I didn't create anything, but one of the common teachings of the time was basically stocks could do three things. They could go up, they could go down, or they could go sideways. And that's true. But as I began to study it, and I really came across a guy, I don't know if they can, let me see if you can see on the thing. Most of you guys probably have this. I'm sure Chris has talked about it. Stan Weinstein. He's an old dude. He used to, it's called Secrets of Profiting in a Bull and Bear Market. And two people, probably the most, Stan Weinstein and a guy named Dr. Alexander Elder, were the two influences. There are a few others that helped me kind of put all this together where, and one day I tell this story a lot. I was sitting in a casino and I'm playing blackjack. And if you've ever played cards a lot, sometimes the cards go your way. And then all of a sudden they just stop going your way. And it's like nothing you do, man. It's like straight down. And I was sitting there, I was like, wow, this is like a real downtrend. And I really started to see it, man. And it just hit me as I'm playing, which has nothing to do with blackjack. Like I'm playing cards and then it just hit me in this moment of clarity. Price is moving in 4 stages. And I don't know why I hadn't thought much about that before. And then it, it was like an epiphany moment for me, man. Like all of a sudden, and when I would look at a chart, it's kind of like when you're looking at buying a Camaro, you start seeing them everywhere.
Mm-hmm.
All of a sudden, I'm seeing these patterns of price movement. Not perfect. Now, some of them picture perfect. I mean, like, looks like, it's like, wow. And as I began to do that, it basically began to give me some sense of order out of the chaos that was, opening bell every day.
Yep.
And it's like, I don't know where it's going. I don't know why it's doing what it's doing. I don't know economic reports. I mean, I can read them and study them, but I know this. I've met a lot of economists and none of them are rich. And I used to sit and think on that. If you know so damn much, why are you a school teacher? And not to say there's not wealthy school teachers, I'm sure there are, but it just always sat on me. Like if that was the answer, if just knowing information was the answer, then all the smart people would have all the money. And I just knew that wasn't it, and that stuff is in it. It goes to certain way. It goes, obviously the shorter your time frame, the more important stuff like that might be. But as I began to trade and invest, I just began to see the what I call a fractal pattern. Mm-hmm. And the way I try to describe it to people at first, just to get them to see that it's super simple, is like, don't make it any more complicated than walking outside and it's cloudy. That's an indicator. And you go, oh shit, it might rain. Doesn't mean it's going to rain, not where I live. I mean, it might look like it's going to rain all day and never rain, but it's an indicator, the wind blowing. And nature's filled with indicators. It's filled with fractal patterns. You can see it on the ocean, water's coming in, waves. Nature's just full of these, Fibonacci ratios and these patterns. And the stock charts they're just human emotions. It's just everyone's fear and greed every day. And there's people from China and there's people from India and there's hedge funds that don't give a shit about you. And there's people that don't care about fundamental, and all of this is converging into this chaos that plays out every day in the market. And what the money flow began to do for me was somehow identify it and say, okay, this is an uptrend, and it's, we can get into what that is. And this is a downtrend, and this is price moving sideways, and this is a breakout. And as I began to define those things, then if we know what our goal is, whether it be trading or investing, then we can figure out the best way to use the money flow. And like, I know you trade a lot of options, so you probably use it slightly different than I do.
You know what, GP, like what I really wanted to emphasize what you're talking about too now of like the money flow is just beyond options and stocks. Like it's
Right.
applicable. It's so applicable to life in general too. I sent the money flow diagram that's shared on my screen, and I sent that to everybody. So you all should have it too. I sent it to the whole group, but the way that I use it in options is pretty similar to the way that you use it in stocks too. Like there's not a whole lot of difference, at least for me. I don't know about anybody else, but for me, it's pretty simple and straightforward.
Right. It really is. And I was fixing to pull it up too, the thing. And I tell people, if you hang out with me, you'll get sick of seeing that pattern, but it's everything. I mean, it overrides the indicators. Everything comes down to that pattern. Because there's times where, we can't rely on one indicator in and of itself, but if we're going to, it's price, and price is doing what it's doing. It's easy to tell, right? We can see the open, like today was a hell of a move. And
yeah.
I mean, that was a big move. And another guy, maybe he's like, yeah, but, and he's like, blah, 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 blah. Like whatever thing he went out and read. But what I've found is a lot of times people are putting all kinds of personal opinions. And I mean, people who don't know anything about the economy, they can't even manage their own checkbook. They have all kinds of opinions of what the market's going to do. And it's like, bro, it's so bigger than you. Like, I wish it moved based on logic. It doesn't. The market doesn't move based on, it might for a second, but the markets move, fear and greed. And that's what this helps us see, is the turning points on that. And what I discovered, like, especially for investing, and I've said this a lot, it's easier to take an investor and make them a good trader, in my opinion, than it is to take a trader and turn them into a good investor. Because the investor is used to seeing the big picture. And I think to be a good trader, especially if you're going to be a day trader, like, what is the damn trend right now? And it's going to be difficult to take day trades against the prevailing trend. And so, or at least we can know, okay, if I'm day trading against the trend, I need a tight stop because I'm going against the wave. I'm going against the wind. What I call the wind, I don't know what you guys call it, but the S&P 500, I call the wind. It's blowing, and it's going to take all stocks with it for the most part. And by keeping an eye on that, using the money flow, laying it over, I think if you're a short-term trader, that gives you, okay, boom, I know what the trend's doing. So now when I go down in those fractal time frames, I can approach it with at least some sort of common sense. I mean, or at least some sort of plan. I know when I day traded a lot back in the day, I used to do it a lot, and I would wait for down days and uptrends. So if the trend is clearly to the upside on the big picture on the daily chart, and we get a day that closes down, I'm looking to start getting long day trades into the prevailing trend, and vice versa the other way. If the trend was to the downside, well, whatever we'd get rallies, I'd start looking to fade those rallies on the day chart when the trend takes back over and the direction we're going, continues to go. And that was, one way to use the money flow in different time frames. I don't do that so much anymore because my perspective is much longer, and I make money other ways. And I think you really got to lay your life over the way you're trying to trade. It's super important. Otherwise, you're going to be in chaos. You're going to be pulled on two different ends. If you're trying to day trade and you don't have a life where you can sit and watch the charts like that, you're going to be chaotic.
Yeah. But one of the things that I wanted to ask GP, and I think that a lot of people could benefit from this, is you obviously didn't start from a place of the wealth that you have now. Chris didn't start from a place where he has the wealth that he has now. So if you're just starting out as an investor or a trader, and let's just say you can only buy 5 shares, 4 shares, how are you using the money flow in terms of when that hits that stage 2, stage 3, and it's time to trim profits? How are you treating that when you have the smaller accounts and you're not as risk averse as everybody else is?
Yeah, I think we briefly touched on that. I think you told me you get asked that a lot.
I do, yeah. It's probably one of the number one questions I get asked.
Right, and you can see. Well, I'm trying to think of a good example right now of one banging the RSI. Let's look at. Let's pull this up. Let's look at like alt. It's just off the top of my head. It's a biotech that's been ripping. And I see the money flow pattern. This is like an explosive stage 2 run up here. And people that know what we're talking about, means price ripped above this green line. So I use the simple 20-day moving average. And let's say this was an investment. It's not a biotech. Let's say we owned 10 shares here. In a perfect world, in the money flow, I'm going to be looking to trim or take some off when the RSI goes extreme. Now, that said, it would depend on the stock as well. And what people need to understand is just because the RSI goes extreme, that doesn't mean the move to the upside is done. Let's say you have a stock that's undervalued by, say, 50 or 60%. Well, shit, you might get 3 or 4 of these. It may run up, bang the RSI, pull back a little, run back up, bang the RSI, pull back a little, run up, pull back. So once you get comfortable with price, we got to take that into consideration too. As a trader, I don't know that we sit around worrying a lot about it running up again. Like, we got to get our money and get out. That's what we're doing. That's what trading is completing a trade, getting out. I kind of sometimes look at that like flipping a house. If you flip a house, you don't look it back up next year and see what it's worth.
Right.
You flipped it, you moved on. That's a successful trader doesn't hold emotions towards stocks. You got to be in to get in that stock, get out of that stock. That was your job. You executed on it. You don't need to then watch it and go, look, it kept going. And it's like, yeah, okay, well, that was for investors. So everybody's earning their money differently. And once you understand how you're supposed to earn your money, so as an investor, I'm going to earn my money over time, but that doesn't mean I don't want to take advantage of these run-ups. So let's say on that run-up here, I got 10 shares, and then you go research the stock, Morningstar, tip ranks, whatever you're using. And they say, look, the stock is actually overvalued. Meaning, let's say they say it's worth $9 and it's currently trading at 10.20 and the RSI is banging. You could probably take, say, 10, 20% of that off and take that money and go put it into something that looks the opposite of this, that's undervalued. Now you say, well, I only got 10 shares. True. I think there's some benefit though to doing what it is you're going to do when you have big money, doing it when you have little money, so that when you get big money, you've already been doing it and you know what to do. I think there's definitely something to that, or at least acknowledging, okay, if I had more shares here, I'd pull some of this off. Like, you need to go through that process in your head or explain why you're not. You may say, well, I only got 5 shares, so I'm not going to bother. But if I had 50 or if I had 500, I'd be taking 50 off here. And then going through the process of why would you be doing that? Well, the RSI is extreme. I think there's benefit to doing the exercise. I think there is. And then waiting for that to pull back and set up. And that's how price moves, right? Like, price moves in these, I'm trying to think of here's a good example. Look at ConocoPhillips. This is one that I got all kinds of people asking. I only got 20 shares. You think I should sell some? And I'm like, well, I mean, I did, because the stock was, in my opinion, overvalued. It ran up, prices got too high. And we saw that when the RSI, this is a good example of what I was saying earlier. See how the RSI went extreme on Conoco, but then look, it ran up again. It went extreme again. It ran up again. It went extreme again. Price can keep doing that. So when this goes extreme, it doesn't necessarily mean the run is over. And if we go evaluate this fundamentally and everyone agrees the stock is worth $100, well, we might go through multiple money flow patterns to get there. I mean, Uber might do 30 money flow runs before it ever gets to $60. So would there be a benefit to trimming my position here, letting it come down, and now I'm looking at putting it back on? Yeah, I think so. I think there's something to it, but not if it's going to mess you up, man. Like, if doing that somehow fucks you all up, then maybe don't do it. But like, I mean, you can see it clearly if you would have took some off, which is there, that's the money flow. It's saying, hey, prices run up too high, too fast. This is when you would trim, especially as a trader. Now I'll tell you, in this situation, I didn't trim any Conoco here because I had already trimmed it here and here. So I was in a core position. But here's what I know as a daily user of the money flow. I know for certain there's nothing I'm going to miss out on. It's coming back down, man. All stocks come down, all stocks go up. Once we get comfortable with that, like, we don't need to chase this up. This is why I yell at people all the time. People buying stocks on 70 RSIs. It's like, what is wrong with you? It's going to come back. They all do. Tesla comes down. Every meme, every crypto coin, everything you've ever looked at, GameStop, all that shit goes up, comes down, goes up, comes down. But to answer, that was a long way around. I like doing it. I don't think you have to do it. I think you should acknowledge doing it. And I don't think it would hurt you if there's no commissions to sell to and then take those, that $90 you just got and go apply it to a stage one and practice your portfolio? I mean, repetition is the mother of skill. What do you tell people on that?
Well, I was gonna ask, in the event that it doesn't come back down, as you look at you look at how far Conoco came back down to that trend line there. That's the ideal space to pick it up at, right?
Right.
Hypothetically, what if it doesn't come down that far? At what point do you say to yourself, man, I just got to get in this thing. This thing just won't stop growing. It's just going to continue to keep going further and further, right? So at what point do you really pull the trigger on that if what it is you're looking at just continues to be a really strong growth stock?
A couple of ways I look at that. Like we could have said that over here, right? Like it hit the RSI and then it started to pull back and then didn't last long.
Yeah, and then it just kept going further.
Kept going up, man. And over here, look, it wasn't much of a dip again, and then it took off. This one's been a pretty nice little tip. Boy, it's funny if you look at that pattern. I mean, it's pretty classic money flow pattern of sideways up, sideways down, sideways. The way that I really try to determine that first is I look at my overall portfolio. I don't want one stock to be too damn big. And so let's say I got 20 or 30 positions. And so what I'm trying to do is weight sizing. So I'm trying to move money to positions that I think have the best possible return to the upside based on their current value. So that's when I dig into the fundamentals or fundamental analysis of the company. And I'm like, okay, what do guys smarter than me, like analysts, what do they think it's worth? And sometimes I hear people criticize analysts and it's like, guys, nobody actually knows. All an analyst is doing is taking what they learned in college. They're looking at the books, the cash flows, the shit the company owns, what they think projected sales are going to be. They're just taking the best known information and putting a dollar amount on it as if you were going to write a check for the business. And
right.
That doesn't mean the stock's going to trade there. It just means if you were going to buy it. So it gives us some sense of value to the stock. And the closer it gets to that true value, it may never hit it. It may always trade below it. But the closer it gets and it starts getting in that 5-10% range, the more likely you're going to see that price can pull back significantly. And then the lower it goes, same thing happens, right? It gets too far away from true value and starts to get a pull to the other side. For me, I would do it based on weighting. I mean, when I say weighting, I mean, how big a position is it in my portfolio? I'm not a chaser, man. I don't chase stocks. I'm not big into that. I like to be in them before they happen. Like when me and you were talking about knee going back and forth on text message. I mean, we were in that talking about that days before the breakout.
Yeah, man, that was a really beautiful trade.
That's what I like to trade. That's how I like to trade, man. I don't like to chase shit.
The other one that we got in on together, or that we talked about together when I texted you, was Fulc, FULC. That was a beautiful trade. That stock ran up so incredibly fast. I think that hit 70% in 3 days.
What was the ticker again?
FULC.
Like, really?
No, FULC.
FULC. I know when you said that, I was like, I don't think that's the ticker.
And so I got, like right in that little run up there in March.
Right.
We got into it right around that February timeframe. I think it was. Let me see. I'll look back in my history. I think whenever I got into that, it was just, I guess, right there on the bottom of where that, the RSI was just at that low point, and it just seemed to have that pattern, that box that you draw there. And I tell people this all the time, is so many people get impatient with waiting for these stocks. And, they're always asking me, how do I snipe all these plays? I draw those boxes on that consolidation, like it's like my life depended on it, because once if it's consolidating for 3 or 4 months, 5 months, when it runs next, it's going to be a massive run up. It's happened every single time on all the stocks that I've looked at, or that I've found for myself, so this was a really great trade.
Yeah, this is this is what I call, this is a money flowing stock. And whenever I say something's money flowing, I mean, there's an obvious stage one There's an obvious breakout, there's an obvious topping, and then an obvious collapse. I mean, it doesn't get any more money flowing than that.
Yeah.
How we want to respond to what we're seeing depends on our objective, right? And what our goal is. It, like we were saying earlier, if we're investing, I mean, we may not care about these 70 RSIs. As a matter of fact, once it hits it, we're basically kind of ignoring the stock. And we're looking, you know, when I'm adding new money, I'm constantly, if it's in my buy and hold, looking for quality stage ones of stocks that are undervalued. So when some shit like we see going down with the MO right now, like we're talking about sniping. So as an investor, I see this, I own it. That also sets up for a possible swing trade or an options play. What if this sets up in a solid stage one and then the S&P breaks out above the 20? Now we got the wind in an uptrend. It ain't going to be long before this stock plays catch up, you know?
Yep.
And so now we're stalking a potential trade. And I'd be like, wow, has it ever stopped here before? And I just go through all my little thing and I'm like, whoa, like it stopped here before, right over there. Is it on an extreme? Yeah, check. So now we got two things. So now all I'm looking for is, do I got a pivot point or an anchor point? There's one. Do I got 4 days? No, 1, 2, 3. So Monday, if we open down in here, this is in play for me, you know, to start nibbling.
Yeah. I want to back up for a second. For the people in here who don't know, can you clarify what a pivot point is and what an anchor point is?
Yeah. And sometimes I use those interchangeably. When I wrote my book too, sometimes if you've ever like tried writing and you're not a professional writer, or, you know, speaking and you're not a professional speaker, you're really just learning from your mistakes, often just embarrassing the hell out of yourself. And then you go, I won't do that again.
Right.
And I would, when I first started teaching the money flow, people would ask me questions. And, you know, I used to have this thing where I'd yell at people, give me the book back. And, you know, people get mad, but I'm just playing around, man. I'm just trying to make it entertaining because it can be kind of boring.
Well, you definitely have to. There were a couple of people in here commenting that it's like, look, GP's being real nice on this live, because by now, if we were on his IG live, we'd all be getting cussed at.
Yeah.
So,
and I try to, you know, I'm just trying to be entertaining, you know, and sometimes sometimes too, like I'm just a person, man. Like I'll cross the line, man. Maybe I get carried away and it comes off as harsh, and I'm not meaning to be harsh. I'm trying to be entertaining. That's an anchor. The difference between an anchor point and a pivot point, there's really not a lot of difference. For me though, the anchor points are the lowest low of a down move and the highest high of an up move. So when I come over and I'm usually looking for them to be on stage 1s and 3s. I hate how this is doing my, where am I at? So I don't know why it's doing it this way. But if you're looking on here and you're seeing the pattern, what I'm looking for an anchor point is in the corners, and kind of think of a boat drops the anchor. That's going to hold him, but then the boat kind of drifts around that anchor, you know, and that's what we get playing out. And usually on the upside, it becomes the highest high, and then the stage starts building out, or on the downside, the lowest low, and the stage starts building out. Some people call that, they call those pivot points, but typically pivot points are just these little points here, as you know, these little, I've heard people call them ABCs and different things like that. And, you know, that's the shit you use to connect trend lines on your channels, you're connecting on that. But when I talk anchor, I'm looking for a current move, and every day I'm looking for the lowest low. So every day there's a new anchor point. So like today is here and it's above yesterday, which the anchor point is actually right there. And so what I'm looking for is 4 days, so almost a week of trading to hold that anchor point, and that validates that point. To me, it's not a go point until I have 4 days that hold it. That keeps me from saying, okay, here's the anchor point, and then look what happened. Next day it went down. Well, here's the anchor point, 1, 2, 3, and the next day it went down. So by sticking to that rule, it's allowed me to, you know, to really make sure we're getting to the bottom. That's all that's doing, is it's trying to exhaust the move. I'm not really trying to catch the absolute bottom. That's not my goal. My goal is to catch the exhausted move when all the sellers are done, everybody's done with their shit, they puked it up, and now it's stopping. And that anchor point allows me to have that, you know, and often I use that anchor point as my initial stop loss too. Like I'll put my stop in that 41 range, as this thing starts building out sideways. Because if that breaks, then we know we got a new anchor point and the shit starts over. Another,
Right.
yeah.
So when you're talking about those anchor points and looking at that exhausted move, what are you looking at in terms of consolidation for building its support sideways to where you're gonna nibble on the position or re-enter the position and pull the trigger on it?
I want a minimum of 4 bars. If you want to be aggressive, you can use the anchor bar. You can use the anchor bar. Also, sometimes you may hear me say I'm borrowing a bar. If I look to the left and I see clear support, like we looked on Conoco, it stopped here literally before. Sometimes I'll call it borrowing a bar, meaning I'm being a little more aggressive, but I want a couple bars that are holding that. Now, all of that said, if you follow the money flow, the alignment of the moving averages is super important to me. And I'm really only looking at 4, but 3 main ones. The 20-day simple, it's just a simple moving average. And then I call them minor, the 5-day and 10-day, and I use little dots, and those are exponential. They react faster to price. It's mathematically impossible for price to go up if they're pointing down. Not to say you can't have a day that goes up, but you are never going to have a sustained move unless these things turn around and start to cross each other. And we can just go back over the chart. Like we could look back over here and we saw that happen. It doesn't, and you'll notice there was a big move here and then it started moving sideways. But until these moving averages start to converge, not much can happen. So I know as long as I've got a big spread here between these moving averages, this is not going to, it's rare that this thing just stops and then just rips and takes off and never looks back. Could. Now, I want to get in if that happens though. And what I'm looking for is price to get above that 5-day moving average. In my book, I call it the trigger. So any price action around the 5-day is kind of like a finger on the trigger to me. So I'm watching it.
Yeah, I use that. I appreciate what you always say, GP, and I think a lot of people too. You can become a really solid trader by doing this. And the GP has always talked about removing the SMAs from your stock chart. If you're able to see the moves and the breakouts and the breakdowns without those imaginary lines on the chart, you're going to be so much better of an investor and so much better of a trader by developing that skill set for yourself. So I appreciate you actually talking about that and emphasizing that a lot too in your IG lives and things that you do on your pages.
Yeah,
in
man,
relationship to the money flow.
And I appreciate that. And I've just found always, for me, and maybe other people are different. And maybe it's an age thing. Maybe as I've gotten older, this has gotten easier. The market's going to be here tomorrow. And it's going to outlive us. And I remember people think, dude, I remember that. I'm sure you did too. When Bitcoin was 60,000, everybody's like, you think I missed it? And I would say, no, I don't think so. And what I mean is if it's real, it's going to be here for the rest of your life.
Yeah.
And so you have such a long time to master this. And sometimes we put a urgency on ourselves, like, oh, I got to do, and we make up these fantasies in our head. I've got to be this full-time amazing trader. And it's easy to play on that. And it can cause you to start to attach your confidence in trading into whether your trade won or not. And you may have followed the rules perfectly, and then the trade stops you out and you lose money. And you're like, well, this money flow thing sucks. Well, the next guy, he totally picks a totally different stock, and that one rips and runs up. And he's like, man, this money flow thing's great. And it's like, okay, like what it doesn't tell you is what stock to pick, right?
Right.
And so there's all these variables that are outside of our ability to control, man. We don't know what Biden's going to say in the morning, or the Fed, and if you're sitting heavy in EV stocks and all of a sudden they turn on them, I mean, anything can happen. And if we start attaching too much of our personal confidence in our system or our belief based on our account balance, it can really mess you up. You start to chase stocks, start to get impatient. Like I fully expect this is down tomorrow. Like just having watched it so many times, when you get, it'll be down, it'll give me a better chance to get in. There's never an urgency. The more you can get rid of urgency, I really think the better trader you'll be. Even if you miss a trade, fuck it, I missed it. There'll be another one. You're going to make your money over thousands of trades, not one trade.
Yeah, and you know what? It's crazy, and I've emphasized this to the Wealth Squad so much recently, and too, obviously, like on the backbone of myself too, and my own success. Like everybody is going to have that one trade that changes their life, changes the trajectory of what they're doing as an investor. You're going to have that one banger trade that just takes off, that it really clicks for you. You get in at a good time, and then it runs to the North Pole on you.
Right.
If everybody's going to have that moment. One of the things that I wanted to ask you though, I heard you talking about this on one of your lives a couple of weeks ago in relationship to some of the dividend stocks that you were holding. And I found it fascinating because I actually had thought about it. When I know before, like you always usually have the drip and relationship to that on, right? Where you're just automatically reinvesting it.
Yeah, for the most part.
But then you had mentioned at one time that you had said you don't reinvest those dividends directly back into the stock. You wait for it to go back into that stage one, and then you reinvest those dividends back into it at that point. And my question in regards to that was, if you're being paid, if you're getting those payments back to you in relationship to the number of shares you own rather than the share price, what was your thinking based on that?
And it's not hard and fast rules. Typically when I do that it's around, okay, what size is this in my portfolio? Like BX, I have like 50 grand of BX. I just played
BX yesterday.
Did you?
Yesterday it went up like over 200%, almost 300%.
It's an amazing stock. And
yeah.
And if I told people how much money I have in that stock and now my position is 50, they probably wouldn't believe me. Like I put $4,000 in there along, at like $20. And, the stock has gone to north of 100. And then I've owned it like 6-7 years. And sometimes the dividend was 8%, sometimes 4%. But then along the way, I'm drip adding here. I'm taking advantage of these stage ones. And just as it grows over time, all of a sudden it's a large, massive position. And it's so much larger than all my other positions that it's like, to me, it's just, I should just turn the drip off and just give me the cash. And that's a way for me to diversify myself from that position, is by not reinvesting back into that position. You know what I mean? So every time they pay me, I'm kind of getting a little of my money back. And that can be troubling. This can be troubling in the sense that, and I was having this conversation today with a guy who's he's a very experienced trader, trades other people's money. And we were having this conversation and we were talking about, he was saying, I should have trimmed more oil. And I don't think you remember, but literally a month ago, I said, hey, we're going to look back and say we should have trimmed more oil because our positions had grown so large, And I was like, I had settled it. I said, okay, oil stocks are going to sell off again. Exxon will be a shitty stock again. This has happened many, many times in my life. They will fall out of favor. How many shares do I want to ride down when that day comes? And so I want to get ahead of that. I don't want to, when it happens, then be trying to figure it out. I'm always trying to be ahead of the move, ahead of the plan, ahead of the crash. So when the crash happens, I'm not freaked out, not worried. I already made the plan. The plan is already here,
GP, so somebody just asked, during this crash, should we keep holding the dividend stocks and purchase more?
Yes. Like the fact he said that tells me he's probably not even an investor. I'm about to start yelling, man. Like, how'd you get in here, bro? Like at that point, man, come on. And I was saying this yesterday, and I believe
someone's about to get cussed at.
All right, I'm gonna be polite though. I won't yell at Chris's customers. But I was saying this and this is clarity. A lot of people are quasi traders, quasi investors, and they really have no intention. Like if you ever listen to Buffett, he's your ultimate investor. Like, if you want to know what the definition of investing is, he buys a stock and he plans to die with it. That is investing. Everything in between that is a trade in some sort, right?
Mhm.
So I really think it'll help you. And I try to get all my people in the money flow gang, like, get your buy and hold here and your trading here. And you may even have subsets of your trading. You may even, like, I like to put all my triple leverage and my options in one thing and my position trades in another and my buy and holds in another. Cause then when I'm in that account, I can wear the right hat, man. You know, you don't talk to your 6-year-old the same way you talk to your 18-year-old. And yet they can both have made a mistake and they both need to be corrected. But you don't talk to them the same. You're wearing a different hat, you know? And you can't treat your investments like a trade just because the market turned on you. And it's like, ask yourself, what does it mean to be an investor? What does that mean to you? And I'll have people, like yesterday, I had a lady say, my mom's a real estate investor. And as we began to talk through it, what her mom did was buy land, had a brand new house built, and then she sold it to someone. And I'm like, your mom is not a real estate investor. Your mom's a house flipper. She buys new houses, fix them up, and flips them. Nobody says you're a car investor when you buy cars, fix them up, and sell them. You're flipping cars. Like, everyone knows what that is. You're flipping stocks. If you start calling that investing, you're going to be a horrible investor, because you're going to see investing as moving in and out and in and out. That's not investing, man.
Right.
Yeah, you can't. There's no. That's not an investment. Now, but that doesn't mean I'm picking on trading. I'm not saying that. I just want to have clarity about what I'm doing so that I can execute the best way possible. I need to know the mission. You know, I need to know. You know, same. You know, in real estate investing, I'm looking for a specific thing. I want a 2-bedroom, 1-bath house, so I don't spend any time looking at other things. And so I can really narrow down and really focus. And so if I'm tracking this stock, you know, so I don't know, the clearer you can get about what it is you're doing, man, the better. So that guy who said that, should we keep our investments? You need to go back and figure out why you're not an investor based on that question.
Read my book.
Right, man.
or give it back.
Right.
Give the book back.
Yeah, I get mad about that because I know that guy will die poor. If I don't say something to him, if I don't point out how stupid that was, he's going to die broke. Someone in his life needs to point that out. That's where you get slapped in the back of the head. He's like, what are you doing, dude? Like, we need those people in our life, man.
Yeah, it's true. And it's what I really appreciate about you. You've always been transparent about that and come to the rescue of a lot of people in that way, in the same way that Chris has done the same. And it's just, everybody needs that person. And so having the content that you do out there, and yeah, I know we laugh about it, about cussing at everybody and all that stuff, but it's because you've already been in the trenches. You've already made the mistakes. So you telling people about it, if they comprehend it and they absorb it, it's going to bridge the gap for, they're not going to make the same mistakes that you made. They have it so much easier if they just tap into what you're saying. And that's how I felt like I was so successful in such a short amount of time, of just really taking what Chris had said on a fundamental level, and what you had said on a fundamental level, what Kayla and Ray and our other providers in the Wealth Squad were saying too, that I was people watching during this, my time in the community. And when you really execute on that basic fundamental knowledge, it opens the floodgates for you. It really does. Yeah.
I mean, because it hasn't occurred to me to sell a dividend stock in like 15 years. Like, how the hell am I going to get rich selling shit?
Right.
Nobody rich sells things. Like, they accumulate things. That's how they get rich. Now, I'm not talking trading there, because sometimes I say that and they're like, "Mom, what about?" I was like, no, bro. I'm talking big picture investing. If you meet really rich people, they own things. Not to say from time to time you don't sell something, but what you don't see is them going into panic mode selling shit. Like, they don't do that. You know,
right.
They don't. They might, and if anything, they might put on some hedges, right? So that's where the trading skills can help the investor. So if you understand trading, then you could go, okay, well, when the market turns, rather than sell my dividend stocks, why don't I short the S&P? You know, or go take, get into an inverse fund or something. I mean, I don't know. I'm kind of over worrying about the market going down. It's like a game for kids. They get all upset about it. All my life, the market's gone up. One thing I figured out over time is housing prices go up. So does everything else. Milk goes up. Everything. When you die, it's going to be shit ton more expensive than it is right now.
Right.
Once I understood that, I'm like, oh, right, I'm playing a rigged game. And they're like, yeah, it's rigged. Yeah, Home Depot's going higher. Maybe not this month, maybe not even this year, but it is going higher. It has my entire adult life. You know,
Right.
what, and you may think, well, if you just believe that, what if it doesn't? Okay, well, that one didn't, but most of them do. And so I take the same approach to Bitcoin. Okay, Bitcoin's going down. Good. Bitcoin is going higher. Or it goes to zero. Okay, then I was wrong, but I'm going to use diversification. I'm not going to put all my money. And this is where people get themselves messed up. They get into, say, Bitcoin. Next thing you know, they're selling everything they own to put it all into Bitcoin. And it's like you just broke the first rule of investing, and that's you might be wrong, so you need to diversify yourself a little.
Yeah. What are some things that you're looking at now? You got your eye on.
Stock wise, today in the Discord, we were looking at Delta, but it started running fast. The only big moves that I've made in the last few, let's say month or so has been, I added I added a couple closed in funds to my buy and hold portfolio. Some of these dividend yields, I'm a lot like Chris, buy income, man. If I got some money and something's paying, ordinarily is paying 8 or 9%, and the market gets hit in a correction and now it's paying 12 or 13, I'd like to get in on that. And, so that's some of the big moves. Most of, usually every week on Sunday, I'm looking at my portfolio. I'm saying, okay, how much money do I have? Maybe I got $500, maybe whatever. How much do I think I'm gonna put in this week? And then I start kind of narrowing it down to 2 or 3 stocks that I'm looking to target that are set up right. Trading obviously runs a little different, but that's more of the buy and hold thing is I'm looking every week, what can I add to? What is set up right? What's a stage 1? Are there any 3s that I could trim to get some money? So I'm constantly evaluating, going down the portfolio. And some stocks are just not involved in the discussion. I have all the Pepsi I want to have. I have no interest in selling Pepsi. I just collect the dividend. So that doesn't take any analysis, and I just go down the list, man. And I'm looking to add to the newest. I only add 1 or 2 new stocks a year. So that could, I may have 5 or 6 stage 1s in a year, maybe not even that many. Depends on what kind of run we get on, right?
Yeah, I had just when I was scanning the market the other day, it came up actually a couple of times on some of the more like primary scanners that I use that help me with the money flow and finding those consolidated moments. I bought shares of Boxed yesterday, BOXD, and that ran up 34% today.
Jeez. Yeah, those are pretty, right?
But it was a massive fall off. And then the upside to that is over 500%.
Yeah. If it gets back to where it was, right?
Yeah. And so I thought, sort of at minimum, it was going to hit that probably like that $6 mark. Once it hits that 20-day, bounces from there, and then it hits that resistance right around that $6.50 mark.
Now, what made you, when this thing, what happened that made it go from 11, other than the market being down to 30? Was it purely just the market, or was there?
I'm pretty sure it was just the market, because if you look at the timeline of it all, like it's retail, and it just sat there and consolidated for months and months, and then right when the market started to tank, that's also when all of retail started to tank. And it all, like, if you go and look at all of the retail charts, it's so similar to this in terms of the downside to that. And then just seeing down there and at the base of that chart, when it was at like $1.50, when it was just going sideways for those, like you said, those 3 or 4 candles, And then it had that really strong upswing to $2 or whatever it was, $1.90 or something like that. And then for me, that was my trigger point to that. If anytime it takes a big gap like that, it's generally going to be followed by a series of other strong run-ups at the same time, at least in my understanding of how it all works.
And that day where let me see if I can pull it up. This day here where it banged above what I would call the trigger, the 5-day right there.
Mm-hmm.
So look, I mean, we got an anchor point. We got 1, 2, it's 3. But since it's above the 5, I don't really need to wait for 4. So if I'm like you and if I'm stalking this stock, should I buy here? And it's like, no, that's not an anchor point, right? Because the next day it went down.
Mm-hmm.
So you see how the anchor point would have walked somebody right into this trade. Is that the lowest low? No, we need 4 days. Well, is that the day? No. Is this the day? No. And then the next day it's above and you're like, oh, okay, hold on. And then we got 3 and then we got above the 5. That's your trigger. And
so I got in that at, I think it was 179 is where I got in.
Man, you did this. You played this perfect, bro. And then Morningstar it says it's undervalued, and Morningstar is conservative. Like if you go to Morningstar, they're giving you a pretty damn conservative estimate. Usually my estimates are higher, and tip ranks are almost always higher. So if you get some shit undervalued with Morningstar, it's probably undervalued, and they have it undervalued they say its true value is 629. That's 72% higher from here. Shit, that's more than that.
Yeah.
So good find. How'd you find this? Well, what were you just running scans on stocks that got smashed?
Yeah. So, and it was also ones that just had the setup of that would be long-term swing trades over a period of 3 to 4 days, but it was also based on the Heikinashi candlesticks.
Okay.
And just a series of those. I ended up giving this scanner away to the Wealth Squad. I'll pass it along to you too, GP. Like I find a ton of money flow opportunities from doing it.
Yeah. It's a little scanner you run, huh?
Yeah. So I do most of them on FinViz. I use their screeners, and I don't, people use Thinkorswim or whatever other platforms they use, but FinViz has always been my bread and butter.
No, it's a good website. Those are little tools that we can, Dr. Elder calls it the 3 M's, money, you got to have money to play, your method, and mindset, right? And part of your method is this kind of stuff. What kind of websites do you use? Like I like to use Morningstar and a few others, and everybody's going to have their own little tool, but you need to create a routine for yourself like that. That's how you add order to the chaos,
Yeah.
I'm sure you have a very similar morning routine. You're probably scanning FinViz and going through all, doing the same shit, right?
Yeah. And it's, like the beauty of those scanners is that it really is just to sift through the noise at a quicker pace. You can pinpoint the parameters that you're looking for in terms of price targets, budget, everything else. And it can expedite your process to where you're not, sifting through a bunch of junk all in one sitting.
Yeah. Yeah. I don't do as many scans as like a lot of people. One thing that I try to get new traders to do, if I can, is I want them to get those hours on a chart. And sometimes, a guy will be new and he's like, oh, I don't want to look at 50 charts. And I'm like, well, then go do something else. I don't know what the fuck to tell you.
Right.
Like you look at a lot of charts. I don't know what else to say, man. Like trying to like when you're just getting started, I think you should spend some time, because here's what I've found. Let's say that I'm following Twitter, Snapchat, Facebook, and all the social platforms, and I see Snapchat breaking out. Oh shit. Well, maybe Google, so real quick, I can go look, well, who else is in that sector? And you can gain so much knowledge of the market by spending time with these stocks and knowing, like what are the top 5 or 6 utility stocks? What are the top, oil stocks and what are, mid-range, midstream, and be able to go through these charts. And as you're, I go through them pretty fast, but I think there's some value into that, where you're like, okay, click view all.
Right.
And when I see alt, and it's banging a 71 RSI, I got a good feeling when I go look at other biotechs, they're banging a 70 RSI as well.
Yep.
A lot of them are. So that could tell me, wow, maybe now I could go look for some laggards. Maybe there's,
Yeah. When I am looking at charts, and when I first joined the Wealth Squad, I mean, I was looking at easily 500 to 600 charts a day. That was my routine. Literally every day, because, it too, like being an athlete, right? You can't expect to run a marathon if you're never putting in miles, or if you're not putting your body through those things. You can't expect to be great at basketball if you're not shooting 500 free throws a day or 1,000 shots, right? So I treated that in the same way, that those stock charts were my game tapes. Those stock charts were that it's my business card. It's what's going to get me in the room. It's going to get me that role, as an actor, right? Like, that's where I need to put all my emphasis. And understanding that. And so just knowing like the amount of work that I'm putting in doing it, it's just going to snowball, and it's going to compound on top of itself.
It does. It's not wasted. I mean, I have this new ebook coming out, and I was talking about that concept that's, I talk about this idea sometimes that what you give away, you get to keep. And you're given of your time when you do that. That time's not wasted. It's coming back to you and compounded, no more than, you first start hitting the gym. It's not like, you're not Lou Ferrigno.
Right.
But as you keep doing it, that time starts to come back to you, man. It starts to compound on itself.
Well, and it's also too, like what you've talked about a lot, right? What you think about comes about, what you focus on grows, right? If you're the person that's looking at all them stock charts and like, oh, I'm looking at all these stock charts, I'm not really making any plays, I can't find any opportunities, I'm doing this, my stocks are all getting thrashed, my portfolio's down. Well, then you're just being an asshole to yourself.
Yeah.
Right? Mentally, you've already taken yourself out of the game because you're not even positive about what it is you're doing. Therefore, that's going to influence your confidence or your lack thereof. And you're going to get thrashed. You're going to get kicked in the nuts. Like, if you're looking at 500 to 600 charts a day, you gotta have the mentality that, look, man, I'm going to be a beast in this market. I'm going to be a sniper. I'm going to snipe these out. And sure enough, you will. It's inevitable. It's inevitable.
It is. And you got to find, I think you got to find, your way of trading that's comfortable to you. And if you like to, if you're into that, if you like to, try to finding those can be a lot of fun. It's addictive, right? It's like, it's fun. But if you don't like to do that, if you don't like to research, if you don't like to look at it, if you're only doing it for money, you're going to give up pretty quick. I mean, you've got to be getting something else out of it besides just money.
Right.
In my experience, nobody does anything very well for very long if it's just money.
Right.
Yeah, you'll be, I traded for a lot of years for free. And I was saying that, I mean, and I paid to play. Like, I probably lost $60,000, $70,000. When I say lost, I mean, closed the trade, took the loss, moved on. And to where I was hiding it. Like, I hid it from family. I wasn't necessarily hiding. I just didn't tell anybody. I'm not going to tell you I just lost $9,000, and as you do that over the years, and I was able to, I've always been a decent earner. So if I lost money, I would just earn money back, put money back in the account, and then the account would blow out and I'd earn money back, put it back in the account. And I would just keep doing that, man, and trying to find my path, my way. And everyone I've ever met, whether it be in stocks or real estate, have a story of blowing out or losing shit. Like, you're just going to get things wrong, but hopefully you learn from your own mistakes. And every time that I blew an account out or just somewhere, I was doing something clearly stupid, like going all in, leveraged on, Netflix earnings. Fuck it. I'm all in. $20,000, something stupid like that. And it doesn't go your way. I mean, all in one sector and not realizing, as long as you can mentally understand what that means and handle it, then, You know, I mean, when this last correction happened, I had so many people come to me and be like, I don't understand why my stocks are all down. And they're literally all growth stocks. Like,
Right.
it's like, bro, how do you not know this? Like,
Yeah, there's no diversity.
yeah, you're in all of the exact same plays. If you own all of Kathy Wood's stocks, it's going the way of the fund. I mean,
Hmm.
you know, so we got to know that. Like Roku is going to follow Shopify. Like as a general rule, like they may break ranks, you know, from time to time, but you know, if you've been in the market more than a day or two, you know, if the market's in a down move and you have a stock, you know, kick earnings or whatever, and they break out at the open or before the open, the chances of them holding that move, you know, it starts to sell off as the day goes on because the general trend is to the downside, you know. Yeah, and they're all going to move together, man. So you know, just try to do, I mean, on those kind of things, just try to do your best to see those that happening and you know, and try to understand what it is. Like right now, all oil stocks are coming down. You know?
I was just looking at some of the market scans for tonight.
You do it at night a lot?
Uh,
Or you're
not,
morning at it?
yeah, not as much at night anymore because I've realized like it's all great what things are after hours and all that stuff, but the real sauce is in pre-market. Pre-market almost always crushes all of the after hours gains almost every time. So a lot of the times I'll just have an idea at night. I'll look at a couple of things, but then when I go back in pre-market, it's totally different. They're not on the, you know, they're not on the scanning list anymore. The setup has changed completely. So a lot of the times I'll wait for it in the morning. I'll wake up, you know, like, or I'll dive in around 7:30 and start looking at things and see how it's reacted in the morning.
Mm-hmm.
But I'm seeing like there's a couple of it looks like TFC and CNO, like their banks and insurance. Those two charts are looking at least to me, stood out to me when I'm looking at them now, is that they're right at a level of doing something. TFC not so much. Well, I guess TFC kind of is that way.
Boy, and these stages were coming. I mean, we had been talking about it in our Discord group. It was, I mean, it's just what happened today is, you know, what I expected to happen. We got our pivot points, we got multiple days, and they're pushing up above the 5. I fully anticipate at that point it's going to rip. And we're going to run into trouble up in here. That's going to be overhead resistance, right?
Yeah.
So we can pretty much plan on it. Anywhere there was a box, like as you go through, I do this exercise, and here's a good exercise for anybody out there who's new at charts. Print them off, man. Get a printer, print off a chart, get a pencil. I used to do this shit relentlessly and just mess with them. You know, I mean, you could do it on your computer. It's just something about touching it, in my opinion. And I would just start drawing these little, you know, I would find the boxes and I would draw them and I would do the support and resistance and it looks like a madman, you know, like you're like, people can't even make sense of what it is. But what I would see is I would begin to, you know, it just really helped me see. I mean, look, you can just see the money flow all over this XLF, which that stock you mentioned obviously is part of the XLF. It's a banking stock. So, you know, where is it on the money flow? Well, stage 4 client, price going sideways, got a stage 1 forming. Shit, we're probably about to run. And target, you know, if I'm trading it, my target's up here in the 35 range probably. I mean, the RSI would probably kick in before then, but that's the other thing too. The more you do this, the more you almost know where the RSI is going to go extreme. Like you can just look on the paper and see it. I mean, probably right around in here, it's the RSI is going to be extreme. I mean, this is the XLF. You were talking about the what? The
what was this? TFC, I think it was.
TFC.
TFC and CNO.
Yeah, man, that's a full-blown stage 2 breakout there.
Yeah, TFC actually looks really great. Like once it breaks that box right there at 90 ish.
Yeah. Oh, which one? What was the other one?
No, that one that you're looking at.
Yeah, that's 50s right there at the box. But yeah, I mean, this is gonna fly. So I imagine this keeps going.
Yeah, and That's what I always tell people too. When I'm looking at charts and I'm using the money flow, is I'm looking for those really big gaps in the chart. And by that of meaning like where that's at right now in that box, right around the 50s that you say, and then right up there where that that resistance is with the trend line there is like, that's just a massive gap, and it's gonna end up going back there at some point. It's just a matter of, at least what I say is like, okay, if that was, what was that, April, when it was at that high point. Okay, so now if you get into this, you nibble on this trade, you have at minimum to hold on to those shares, or even option contracts that you get into, if the options are tradable on it, is that it's not going to reach that until at least another 2.5 months. The same amount that it's taken where we're at now in June. If it was back there in April, then you've got 2.5 months before it even goes back to where that is. And it may or may not happen, but that's, for me, the timeline that I've given myself when I'm getting into trades, so that it manages my patience. It manages my, even position size too, of like how many shares I buy. What am I nibbling on this now, or what am I doing?
You want to know what's funny? I pull it up on Morningstar and they give it a fair value of $64. And if you just look back on this chart, when it hits $64, it turns around.
Yeah.
And you'll notice the RSIs are extreme when it's around 60 something dollars,
Yeah.
So has it ever been there before? It's like, yeah. So is it hard to conceive it could go there again? No, especially as the interest rates are rise, banks are going to make a little more money. Like, yeah, man, things are turning around for them, but we know it could easily get to 58. Shit, that's below fair value. And it's been there multiple times, right?
Yep.
Yeah. And that's what these charts are doing. They give us order, but it doesn't replace common sense either, of like understanding what it is you're trading, what sector is it in, what role does this play in the economy? It's a bank. Okay, well, we can start to kind of think through some things, Yeah, man, good one. I like this. They pay a dividend?
I don't know. I need to go in and research this a little bit more. Like, and that's a lot of it. It's just like scanning all these charts. You always end up finding stocks you don't really know anything about, and then you could dive into further research on it.
And that's where having some trusted sources that you just take their word for it in the meantime.
Yep.
Like I like Morningstar. Maybe it's Zacks, maybe it's the street, it's whatever. And you just throw the ticker in. And if they give it a number, just for right now, go with that. That's your true value. That's your target. And as long as my target is below their target, then I know my target is at least conceivable by most reasonable people.
Yeah.
It's like, I'm not too far, I'm not out there. And so now if I line up the money flow with that, I mean, man, that's a lot of confidence for me anyway.
Yeah. What's CNO looking like to you?
CNO.
Yeah, to me, I mean, it looks like it's about to bust out of there too.
Hold on, CNO.
That's
Yep, we got all these bank stocks. Ooh, yeah, man. Ooh, that was a nice move today. And man, everything was coming in, and we haven't gotten into, the MACD and all that and how that plays in. I really love the MACD histogram.
Same.
And all I'm looking for is the slope, right? I'm assuming you're doing similar.
Yep.
And what I'm looking for is when it starts to kind of go sideways, that tells me, okay, momentum is turning. And the moment it ticks this way, it tells me momentum is ticking the other way. And again, in and by itself, it's not perfect, but when we combine that with the stages, with the price move, with the moving averages, with the fundamental targets, and that may sound overwhelming, but Mike's probably running through that shit fast.
Yeah, and and I mean it's similar to you too. It's just that repetition when you've done it so much. Like, you don't need all the indicators on the chart. You don't need all those things. You've looked at so many, and the stages. You can spot it in a split second. It's just like being in the military. You can automatically spot right now every single military person on the street, or somebody who's had that history of like the way that they walk, the way they carry themselves. They don't put their hands in their pocket. Like even the vet, like there's little
The guy
man.
strip his cigarette. You're like, okay, I know where he's been.
Right. No, it's good stuff, GP. I really appreciate you coming on here. I want to be conscious of everybody's time. If anybody has any last minute questions for GP and myself, we'd be happy to answer them for you guys. But I appreciate your friendship so much, and I appreciate the content that you give out on your Instagram and Twitter, and just being a man of the people, just like Chris is, and just doing the Lord's work, man. And this is a first time in Wealth Squad. And so it's been a real treat to bring the money flow into the Wealth Squad and have it to be explained by you. Yeah. Rather, like people have really appreciated when I've explained things in these trainings, but bringing you on for me it's special tonight, man. And so I really appreciate it. Yeah, man, I was honored you asked me. It's a passion of mine, and I don't, I'm not saying, I mean, to me, it's the way to trade. It's how I see the market. And I meet people all the time that have made way more money with the money flow than me. And on one hand, from my perspective, it's like, damn. But the beautiful thing about that is I could hand it to a 23-year-old, and I mean, he can make millions of dollars with it. Yeah. One of the things that I want to say to everybody in here, because everybody asked about like me using this with the option side of it, and we talked about this a little bit earlier, is like the money flow is applicable to options, because options, you're not trading the share price, you're trading the premiums of the cost of the contracts, but they're all influenced by the share price. So it doesn't matter what time frame you look at it on. Even if you go look at a 5-minute chart, a 20-minute chart, or a 5-minute, 30-minute chart, whatever, and you zoom out of that chart and you're not looking at the direct minute of the day that it is, when you zoom out of that chart, you're going to see the money flow all over that chart. If not more, I think you actually see it a lot more and a lot clearer on the lower time frames than you do on the day chart. Yeah. Depending on the thing we're talking about, sometimes it may money flow better on a 1 hour than it does on a daily. Yeah. And so when people are like, oh, I got out of a trade early, or I got clapped on this or this, I always like to ask them, well, did you chart it before you exited? Did you chart the trades themselves? And most people always say no. But if you go and look at it on those lower time frames, the money flows all over it. And so you don't, it's been so beneficial for me in trading options, and it will catch. I'm with you on the options too, GP. Like they're hella risky too at times, but at the same time, like if you just know what you're doing and you can understand the flow of if you can understand the money flow and you can apply that to options, man, you can run up a serious bag on these stocks. Especially if it's shit you're comfortable with. Like if you're on Walmart every day, like you and Walmart are friends. Yeah, you got to know how it moves. Right. You start to see that line up and you're like, oh shit, it's about to, you can tell. Then it's like, I'm gonna juice it. I'm gonna put some options on it. But if it's some shit, you don't even know what it is. You don't know what sector they're in. Like you're going to be all over the place. So I like to do it with friends, so to speak. Like make sure you know this stock, man, and you'll get to see how it moves. One thing I wanted to point out before I went was on here on Bitcoin, we're talking about different time frames. I'm always watching it on the daily, and I don't know if this is the bottom, but I'm gonna buy the bottom, like because I'm gonna buy all of them, and they all look the same. You get an anchor point, and now we got 4 or 5 days. Yeah, so we've been nibbling on Bitcoin. And they're like, you think it'll go up or down? I don't know. Like, but this is the bottom. That's what it looks like. And guys will say to me, well, it's going to go to this level. Well, I'm glad you can read a crystal ball, but I'm just telling you that is a bottom. That's what they look like. And that's what this one looked like. And it's what this one over here looked like. It's what they all look like. But if we drop this to a 4-hour, while we got this solid stage 1 here, if we drop this down to a 4-hour, which is where I've been swing trading it on, we got a nice trend moving higher here. We have the breakout. It's moving higher. We just need to get above this little thing here.
So, you like we said, it sometimes you go lower and it starts to look a little clearer. You can see it moving.
Yeah, and I think too is like when you get to those stage ones, when you get to that stage one accumulation, like two things are going to happen. It's either going to go up or it's going to go down. And what do you do in the scenario where you think that it's at that stage one, that level of support? So you go in, maybe you go in a little bit heavier, and then all of a sudden Uncle Jerome makes a speech or Biden makes a speech, tanks the market, and everything goes against you.
Yeah.
So in that scenario, the money flow has really helped me to manage the patience, my own fear, or, with the market of where I think it's going or where I think it's going to level out. And, I bought it at this level where it's at, it goes down. Okay. Well, now what's the next level? Now I just need to wait. There's nothing, it's out of my control at this point.
Right.
I need to just wait for it to drop and then scoop it back up one more time and just repeat the cycle over again.
Yeah. And I attach all my confidence to the market in my ability to do what you just said, and not necessarily in my ability to predict direction, but it's in my ability to execute on a breakout or a stage one. It's not on whether the trade worked, because I don't get to determine that.
Yeah.
I don't pick that. That's up to everybody else. But I do get to decide if I execute properly, if I bought at the moment the breakout happened, or, was it a good entry or a bad entry? I get to determine my stop if I'm going to use a stop. A lot of things I can control, but where price ultimately goes isn't one of them.
Yeah.
And we got to be okay with that, man. Once you're okay with that, like, you get it out of your system. I don't need to know. And that'll blow people's mind too, that I could be in a stock that I was trading. Well, you said buy it in 50 on a stage one. I'm like, yeah, well, now the stage one's 20. I don't know what to tell you. Like, if we stay with it, we can trade our way out of it. I've done that so many times, but and if you don't like that, then you implement stop losses and don't let yourself come down that far if you can't mentally handle it.
Yeah. Somebody had asked, can I use Heikin-Ashi candles with the money flow? My answer to that is yes, because the money flow is just candlesticks. One candlestick is equal to 1 day. So it doesn't matter if it's a Heikin-Ashi candle, if it's some other strategy that you're using. A candlestick is a candlestick. That's all it is. It still has support, still has resistance. And if you zoom out of the chart and look for that pattern that GP is, built through his own knowledge.
What do they call this in the candles? This is a hangman, right? Upside down cross. It's a hangman.
Yep.
So, and this is what I tell people a lot of times. They're like, but what about Fibonacci ratios and all that? I'm like, listen, all that works just fine. Or we could just call it a fucking anchor point, and this is a stage 3. Like, why we got to complicate it? That's what that was, right?
Yeah.
So we could call it whatever, or you could just call it a stage 3. And that's what I started trying to do, is just simplify everything rather than trying to calculate 6.27 and putting all this stuff on. I'm like, or it just stops where it stopped before, and that's support. I mean, like, I'm always trying to make it easier. I want everything simpler.
Yep. It's the same for me too. And I've really tried to emphasize that to our community also. Just in the charting that I've done with them and one-on-one sessions I've done, is people have 5, 7, 8, 9 different indicators on there. And
crazy.
When you start getting all of that stuff, you start adding so much, it just starts convoluting everything that you're trying to do. And half the people put indicators on there and they don't even really know what they're there for.
Right.
Or how they work together with something, or how they don't work together with something. You have to find a certain flow with the indicators that you use and how they all inform each other or don't inform each other. And some of them have no relevance to each other.
Right. Some of them are repetitive. They do the same shit.
Right.
It's like, bro, that is this. And it's like, every time the RSI is extreme, so is that. So why don't you clean your chart up and just pick one?
Right.
Right. I have some things I use just because I'm what do you call it? When you just do it out of, because you've done it.
Habit. You're OG, man.
Yeah, nostalgic.
Cool.
Like,
Call you old school, man.
I use the TSI. Nobody uses TSI anymore. And the only reason I leave it on there, it's just kind of sentimental to me. I don't even have the time to look at it. It's been on my charts for so long, but everything else tells me the same thing, it's,
Yeah.
you really only need, I mean, end of the day, if you can see the 4 stages, I mean, maybe the 20-day and the RSI, maybe the 5-day, that's really all you need. If you can't trade with that, I mean, you're probably doing something else,
Yeah, I think we use the same. I just use the 20 and the EMA 5. That's it.
Mhm.
Support and resistance. Don't need all the other stuff.
You really don't. And when I do my boot camp classes and stuff, I like to start with a naked chart. I mean, you can so clear see. I mean, just like something like right here where I got this thing all jacked up, but I mean, look at this support. Like, I mean, resistance. I mean, like it hit it, turned, hit it, turned, hit it, turned. Becomes so clear. You start to see that shit when you don't have all this other stuff on your chart, messing you up, man.
Yep.
Yeah.
That's that Larry Bird shooting free throws at night type of shit right there, man.
Right. Right, man.
Well, GP, I appreciate you. And this is a really great night. Teaching the minions the money flow and giving people a greater understanding of being an investor and being a trader. And look, anybody who in here who is not following Gerald, you can find him on Instagram. You can find him on Twitter. Full Auto 11 is his handle, all lowercase. He only has one account. He's not going to ask you for money. It's the same as us. Like, he's got the scammers too. So be cautious of that. And look, buy it. Go and take a look at the links in his social media for his books, his content. Tap into what he teaches, because you learned from the Godfather tonight. That's it. The Godfather, the guru of it all. So I appreciate you being here, GP. I know that the Wealth Squad appreciates you being in here too.
Yeah, man. I mean, I've only ever been shown love from you guys. And, since the beginning, ever since Chris bought my book and told people about it, and they've been nothing but kind, nice to me, man. And, I help anybody I can help. Anybody wants help, but you got to want to help yourself too, but there's tons of, between all of us in the community, there's tons of great information out there. Just don't get overwhelmed by it, man. And I'll leave with this, but sometimes I'll go look at a trader and he's following 50 traders. And I'm like, dude, I follow 2. What the hell do I need? I don't need to know what they think. I know what I think. The only ones that I actually pay any attention to is like me and you talk. So we text each other and you're like, hey, you see this? And I'm like, oh yeah. And I go, look, I don't want 50 people that'll turn my attention to something, because it's hard for me to have my own opinion, man. It's hard for me to build any personal conviction on anything, and so I want to have a few people. And if someone, like if Michael sends me a text, I read it and I go, look, like, because I respect his opinion. You can't do that with 50 people, man. Like, and I don't mean like if you're friends, I'm talking about like hardcore, like these guys are out there trading, putting out stuff. And it's like, why would you follow 45 public day traders? It's chaos, man. Your brain's going to be scattered, man.
Yeah, you gotta simplify what you consume, and you got to keep that circle small, especially when you have mentors or people that you follow.
Crazy. Yeah, man. I when it comes to social, man, the one I listen to the most is me. I listen to my own content a lot. Yeah. And then I listen to like 3 other people, man. I just don't have a lot of room and time in my life for a lot of chaos, because I don't want this guy's trying to scare the hell out of me. This guy says the economy's crap. This guy, that's just chaos, man. I just look at the charts. Money flow tells me what to do. I already got a plan. Market comes down, I buy stage 1s. It's already been determined. I wrote about it 7 years ago. And that includes the next crash and the next one, and the one when I'm 62 and the one when I'm 74. I already got a plan for that one too,
Yeah. Now you said you're going to be out here. You're going to be out in New York in what, September, you said, right?
September. Yeah, I'm doing this. Yeah, Campfire real estate project, and we're going to do a thing. I'm going to try to break off and do, just a little get together of some sort, maybe.
Well, yeah, man. Look, if you got that pocket of time when you come out in September, let's try to do something. We'll put the Wealth Squad and the Money Flow all in the same room, and we'll put something together out there. It'll be dope.
Yeah, man. I had a great time last time we hooked up. That was fun.
Yeah, that was a good time, man.
You
Well,
gotta come to New Orleans, man. Come see me in New Orleans soon.
Absolutely. Absolutely. That's going to happen very
A
soon.
lot of wealth squatters in New Orleans.
Yeah, we could, I'm down. Whatever you're doing, GP, the rooms that you're in, the content that you're putting out. I've been a fan since day one.
I appreciate that. A few weeks ago, I'm walking down the street with my wife. We're just minding our business, just walking. And someone yells from the road, man, like passing by, like cars going fast. He yelled out my name. He's like, "Full." He's like, "Wealth Squad." I have no idea who it was, man. I'm like,
Yeah, it's awesome, man. I've the same too, just being noticed in public places too. And it's great to connect with people behind a Discord, right? You don't really see them face to face. And so when you get to see them in person and connect in that way, it's really great.
yeah, man. Yeah, man.
We'll put something together for sure.
Yeah, I appreciate you guys. Anything I can do for anybody here, just let me know, man.
Awesome. Good deal, GP. Appreciate you coming on board, throwing it down for the Wealth Squad, the money flow. Tap in, y'all. Appreciate you guys tapping in tonight. You guys have a good night.
Thank you, sir.
Bye, guys.